Going to continue to go down the list. Amazon, that's going to be your pick of the day. Love this downward sloping trend line. Breach to the upside. Put up the major moving averages to see where they come into play. That's the 200-day, 100-day, and 50-day. Hey, we are above all of those major moving averages. I like Amazon to continue to float higher. Notice that the stock is very choppy. You can see that in the price action in here, but I like what I see recently. So one thing that you could do is you could sell an out of the money bullish put spread, keying off of the 100-day moving average using 32.40 as your short put strike price. So maybe a 32.40, 32.35. Do that for a $1 credit. You're close enough to the money, you should be able to get that. And the notion here is that even if the 200-day fails, the 100-day will be preserved. But I like Amazon to continue to float higher. So I'm going to pause and then we'll continue this video. Hello, traders. It's Tuesday, April 5th. We're about 3 hours into trading. Let's get right to it. Amazon was my last pick. Not one of my better picks. The trade still worked out, but stock has been a little bit on the weak side. The market has been weak. We're going to take a look at that in a second, but the video came out last week, 4 days ago. I believe it was Thursday or Friday. I suggested selling the 32.40, 32.35 bullish put spread for a $1 credit. And you can see that the stock got pretty close to the 100-day moving average. That's what we were leaning on. I'm going to click the alert button right here, and you can see the stock never did get below the 100-day moving average. It never did get below the 32.40 level. I think it was about $6 out of the money on Friday. It expired worthless. Again, not my best pick, but I did suggest doing a bullish put spread for a reason. That reason was that I suspected we were going to see some market selling somewhere along the way. This type of trade was going to give us the cushion that we needed. 25% winner. You get a $1 credit on a 5-point spread, $5 between the strike prices. That is $4 that you have to put up in margin. You received one divided by 4, 25%. So nice. Again, not my best pick. You can see that Amazon is back below the 200-day moving average. The market is currently challenging the 100-day moving average. So we're going to take a look at that. And this is a critical juncture for the market. I am leaning bearish today. Market can go in either direction as far as I'm concerned. So I'm not swing trading, at least not for the moment, until I see us have a nice pullback and establish firm support. So let's get to the pick of the day right now. I'm going to go into my heavy selling and I'm going to go right into GM. I like GM. I think this is going to be a really nice bearish pick. I think it's good for a day trade. I think it also works for a swing trade. There's an upward sloping trend line right there. You can see how it's been violated to the downside, was not able to get through the 50-day moving average. It has been weak when the market has been strong. That is relative weakness, and we can pick that up by looking at the 1OSI indicator. Orange line below zero, relative weakness. That's the key to all of these trades. That's why they keep working time in and time out. So for those of you who just want to review the previous pick, just want to see the new pick, there it is. I'm going to continue in just a second. Good morning, traders. It is Friday, April 8th. We are about an hour before the open. Let's start with my previous pick, GM. I liked it short. So Tuesday was when that video came out, and I had explained to you exactly what those instructions were. They were predicated on the market closing below the 200-day moving average. This is a daily chart of the SPY, and there is your close below the 200-day moving average. As soon as we got that close, I had suggested that you take a short position in GM. Why? Because you can see the upward sloping trend line that had been breached to the downside. Folks, from the close Tuesday till yesterday's low, that stock dropped $4 or 10% in just 2 days. Excellent, excellent money to be made. I hope that some of you were on that. Again, my market opinion was short. So, excellent trade. Another winner because that's what this system does. Relative strength, relative weakening up. TGT. I actually had an alert line drawn for TGT right there, which coincided with a breakout above the 100-day moving average. Actually, my alert was right there. And as soon as it poked out above that 100-day moving average, I knew that I also had a trend line violation that I could lean on. That was bullish. The stock took off. We traded it yesterday in the chat room. I still like it. I like it for selling an out of the money bullish put spread. Retail stocks have been doing fairly well. You can see where the 50-day moving average comes into play, right around the 214 level. Let's call it 215 because this price action is going to eventually drag it higher. We have a nice, beautiful breakout above the 100-day moving average and above horizontal resistance. 1, 2, 3 touches and through. Nice. So that is our first line of support. The 100-day moving average is our second line of support. The 50-day moving average will be our third line of support. All of those support levels make it harder and harder for the stock to fall through there because we know at those levels buyers are fairly aggressive. We also have the market above the 200-day moving average. We also have earnings season starting. So I'm not getting more aggressive with my swing trades because I think as we get closer to that May FOMC meeting, we're going to start to see some selling pressure again. Hello, traders. It is Monday morning, April 11th. We're about 2.5 hours into trading. Let's take a look at my most recent pick. It came out Friday before the open, an hour before the open. I suggested TGT as the long of the day. Yes, it opened here. You can see stock currently trading about at that level, but there are plenty of opportunities to take gains on TGT. I still like it, but the market is very soft. So you could look at this pick and say, what the heck? How is this even a good pick? Well, if you overlay the S&P, you can see that the S&P 500 has been down, down, down since that pick came out. So it has held its own. That is the beauty of trading relative strength. Ooh, hey, got the market wrong here. We're looking for a market to go higher. Market's all the way down here. The stock is right where we bought it. That is the cushion. That is the crux of the trading edge that we use. So now that you've seen that the market is heading south, you get out of something like TGT. If you had bought S&P futures in here, held them overnight on the notion that the market was going to go higher, you would have your head handed to you right now. But because you're in the right stock, you've been able to mitigate losses and even break even. And now you can shift your focus to the short side. I'm going to see if it's in any other list. And I don't see it right now, but we're going to go right to it because it was just on there a minute ago. IBM caught my eye. And here's why I like it. If we draw an upward sloping trend line here, we can see that it passes through many different points. So right there, we've got it going through 1, 2, 3 points from start to finish. Got above the 200-day moving average. Now it hasn't been able to stay above that. It's also below the 100-day moving average, also below the 50-day moving average. You do also have a death cross right here, 50-day moving average below the 200-day moving average, both heading south. So there are plenty of reasons to like IBM on the short side. Take a look at the earnings date, which comes up next week. So we've got earnings on the 19th. I think there's an opportunity for us to be short this stock. It does tend to move pretty slowly, as you can see, but once the trend is set, it tends to continue in that direction. So as far as IBM is concerned, I like it on the short side. You would only short this if the SPY closes below the 50-day moving average today. And I think that you can look for a move probably down into the $124 level or so in the next. Hello, traders. It's Thursday morning, April 14th. We have a holiday tomorrow. Happy Easter, everyone. Let's get to it. My last pick was IBM. I liked it short. And this is where we got into that trade. So this is Wednesday, Tuesday, Monday, excuse me. We're right about here when the video came out, and you can see how the stock continued to slip from about 127.20 to about 125. As I mentioned in the video, very low option implied volatility, so you could buy these options at the money, fairly cheap, even in the money. Decent move lower, but then towards the middle of the day yesterday when the market took off, you can see how that's the opening from the stock, and the stock barely was able to get above that opening price, even with a gigantic market rally. I did exit the position yesterday. You've got a nice, clearly defined downward sloping trend line right here. And I can draw that for you. Once that was breached and once you saw the market absolutely taking off yesterday, you had to take your gains. And we'll take a look at what the S&P 500 did. Look at the move in the S&P 500. So, we're short. We get that kind of adverse market movement. If you were short S&P futures, you would have had your head handed to you. But because we are in the right stock, we were able to watch this move unfold, and look what happened during the initial stages of that market rally. Stock continued to sell off. Relative weakness. That's what we trade. That's why every one of these picks in these videos is a winner. Please go back, look at every single video for weeks and weeks. So, that ideal entry point. So let's go and take a look at some searches. I ran this one early, and we're going to get right to the pick of the day. Market down today. Show me a stock that's had relative strength on a 5-minute and a 15-minute basis. Show me a stock that has a trade signal bullish on a daily basis. Show me a stock that is above an algo line on a daily basis. Show me a stock that's above the prior day high. Show me a stock with good option liquidity. When I run this scan, there are my search results. Now, we're going to take a look at Target because it is a stock that I'm watching today. I really, really like this stock. So we're going to zoom out, take a look at that daily chart, and you can see how it's getting through the 200-day moving average. Target is your pick of the day. I love the fact that it's been able to clear this horizontal resistance level. 1, 2, 3, 4 touches. Excellent. Did so on heavy volume. And now on a down market day, stock is able to get through a major resistance level. 1, 2, 3. Now it's getting above that horizontal resistance, which happens to be at the 200-day moving average. Put up the 5-minute chart. Beautiful. Put up that 10 SI indicator. You can see orange line above zero. You can see heavy volume coming in. Put in the 10 volume indicator. You can see volume better than average. So this has all the makings of a really nice trade. Hello traders, we're almost 2 hours into trading on Tuesday, April 19th. Let's go right to the previous pick. I don't even know when my last pick was a loser. Go back, look 20 videos, watch them all. The first thing I start every video off with is a review of my prior pick. Thursday morning, that was my last video, right here about an hour into the open, hour and a half into the open, somewhere around the 237 range. Price-wise is where I highlighted Target. Target currently 244.50. At least a $6.50 move higher. Do you think you could have made some money on that? I know you could have made money on that. What's even more impressive is the fact that the stock had to weather some selling pressure by the S&P 500. Right in here. This is where we got long Target. Look what the market did. The gray line is the S&P 500. Down, down, down. If you had traded futures from alongside, you would have lost a lot of money. My premise for the trade was that I felt that we were going to be finding support into earnings season. Lo and behold, market is running like crazy this morning. The stock weathered that market dip, and now that the market is starting to take off, see ya later. Take a look at that daily chart. It's a beauty. Through horizontal resistance, starting to stack green candles. Through this horizontal resistance, beautiful. We had all of the ingredients that we needed for an excellent, excellent trade. It's good to me. MCD. This is your pick of the day. I love it. Got a little bit of a bullish hammer here. There's your flagpole. There's your downward sloping trend line. Breach to the upside. 100-day moving average. Hello, traders. It's Thursday morning, April 21st. We're about 2.5 hours into trading. I like to start each one of my videos off with a review of my previous pick. Tuesday, 2 hours after the open, McDonald's was the stock that I highlighted, right about in here. Let's call it maybe the 251 area or so. Should have been able to get in there, or even better, given that it takes me a little while to render these videos. Look at McDonald's. Look at that baby go. Let's go into a 15-minute chart, and you can see how it's continued to climb. Another winner. Look what the market's doing. This is a 5-minute chart of the S&P 500. Down, down, down. Look what McDonald's is doing. It's up. Huh. How did pressure? But I'm going to just go with this list right now. I'm not going to pare it back because there's the stock that I want to highlight. There are actually a number of really good ones in here. But AA, this is a post earnings play, and I like it. And here's why I like it. You can see this trend line right here. Many, many touches, how the stock has broken below it. And you can draw that trend line like that. 1, 2, 3, 4 touches, clear breakdown through the 50-day moving average, easy path to the 100-day moving average, which is also where we have some horizontal support. So regardless of what the market does, this stock is going to see some selling pressure. After a gap down like that, we're likely to see some continuation tomorrow or the next day after that. By the time I do my next video, I'm quite confident that AA is going to be trading lower than its current. Good morning, traders. It is Monday, April 25th. Let's start the video off with my last pick. That's how I like to start every one of these videos off. I want to show you what we did previously and where the stock is now. Then you can gauge the performance. Then you can gauge how effective this trading system is. So Alcoa was my last pick. I liked it on the short side. You can see how the stock had gapped down after an earnings release, continued to float lower. Let's move forward. This is where the video came out right about here, 2.5 hours into the open Thursday morning. Let's see what happened. Another winner. That was a $7 winner on the underlying stock. It moved about 10% in the course of a day and a half. And this came when the market was still challenging the 200-day moving average. So I've got to choose one of these. So I think STLD is about as good as we're going to find. Now, there is some fear that there's going to be a recession and that interest rates are going to be moving higher. That's why a lot of the basic material stocks are pulling back. But the demand for raw materials is still there. So I think this is going to be a fairly temporary reprieve for some of those basic material stocks that have run super, super hard. They will find support and there'll be decent opportunities at very least to sell some out of the money bullish put spreads. I'm not going to get into the option side of it for a couple reasons. Right now, I don't know if the market's going to find support today. So it might sell off and it might rally back to the open and finish above that level. And we could be taking a trade in STLD if that happens. It could take a week. Who knows what earnings season might be like? If we go 2 or 3 days without finding any support after some of the mega cap tech companies have reported, all bets are off. We start taking out support levels down here at the 416 level, you do not want to be trading from the long side. So first and foremost is that close from Friday. If the market cannot get above that level intraday, no trade. Can't say that strongly enough. We're just playing a short-term bounce. If it can do that, then here's the parameter that we want for STLD. That is a nice little horizontal resistance level right there. Now it is support. That was also the low of the day from Friday. So we want to make sure that that is preserved. So if the market is able to get back above the close from Friday, back above 426 on SPY, if STLD is trading above that low from Friday, which is, let's call it, it has to be above $90. 89.61 was your price. It has to be above $90. So if those two conditions are met, STLD looks like a great opportunity. Obviously, we want this upward sloping trend line preserved on a very, very short term basis. Yes, we're going to lean on that as well. I know everybody needs to have their stop. That's a support level. That's a support level. We get that nice strong market action and we start retracing some of this long red candle. STLD should find its sea legs. So if it can't get above that price point, if it breaches that price point, all bets are off. We're not even taking a look at it. Then we got to keep flipping and we have to start looking for our next candidate. So that's an exercise that you should be using when the market is falling apart. And here's why I'm doing this. I could come out and I could show you a bunch of shorts and I could say, yeah, this one looks good on the short side and this one looks good on the short side. By the time I record the video, by the time I put the video out, get everybody to watch the video, maybe 2 or 3 hours have elapsed. So here you are focusing on bearish stocks and you're loading up on bearish stocks, and then the market puts in a low and rallies and starts to continue upward. Uh-oh, even the best short will lose money as the market bounces. So what I'd rather do is let's paint a picture. Let's see if we can get a little bit of a market bounce into earnings this week. Let's see if we can do a very, very short-term trade, take advantage of it. Then this lesson will be another weapon. Thank God it's Friday. It is April 29th, the last trading day of the month. Hello, traders. Let's take a look at the last pick. STLD was the pick. Before I get to the pick, I want to first take a look at what the market did. Here was the price action on Friday. Broke through horizontal support, closed on a low. This is where we were opening Monday morning before the open, which incidentally, I recorded the video before the open. So we were getting follow through selling. The first condition, and mind you, every single thing that we do starts with the market. Market first, market first, market first. If the condition for the market is not met, we have no trade. The market drives every single trading decision that we make. It does not matter how good the stock looks. It doesn't matter. If you don't have that market tailwind, there's no trade. We are simply using stocks as a surrogate market position, but everything starts with the market. Cannot emphasize that enough. So right now, we've got a pretty hefty market decline here. When I saw this selling Monday morning, I suspected selling, selling, test support, earnings coming out, mega cap tech earnings. This was the thesis, was that tech earnings would not be as bad as feared, and that we would get a relief rally and we would close above SPY 426. That was the first condition. Market needs to trade above 426. Well, lo and behold, on Monday, we actually got a relief bounce and we got above 426. So the first condition was met. I wasn't expecting that to happen until maybe Wednesday or so after more selling pressure, because a long red candle closing on its low like that is typically going to get follow through. And we saw it. So in any event, we had to weather some pretty hefty market selling in here. The stock that I picked was STLD. Steel Dynamics. I still like it. The second condition to the trade, and this is the price action on Monday, was that the stock needed to trade above $90. You can see the $90 price point right here. If I hover over the candle, you can see the price was $90.13. That was the high of the day. Hey, it's above $90. Take the trade. Look when it happened. It happened in the last half an hour of trading. So I also was not crazy about taking a trade right on the closing bell. I would love to get a trade off maybe a few hours before the close and see continued strength into the bell. But this is how the trade unfolded. And this is the edge that we trade. It's the edge that I preach. We were in the right stock. Look at the market bloodbath that took place Tuesday, Wednesday. Look what the stock did. This tells you that institutional buyers are out there supporting the stock. It never pulls back with the market. If this stock were all fluff, wham, 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 wham. They would be pounding this thing mercilessly. Let's go into that daily chart. That's why I like it. You can see long tails under body here. Stock still trying to creep higher. I still like STLD. So it closed. We're probably down about 35 cents on the trade. No big deal. Call a spade a spade. It's a loser. I still like the